Hey everyone, this is Kirk here again from Option Alpha, and wanted to do a quick video update on the markets and some divergence in charts that I want to go over. But as always, I invite you guys, please add your comments to these videos. I always say too late in the video, and I have to get better about doing that. But I always welcome comments on anything that we talk about, charts. If you agree, disagree, anything that I might have missed, please add it. It always adds to the community here. So you're probably wondering why there's a banana peel on the screen, and really, that's how I feel with the market right now. Going into expiration week, and most of the expiration stuff happening today and tomorrow, pretty much all in cash at this point. Don't have many large positions at all. And I've told members this a bunch of times and sent out some videos to them, obviously, a couple times yet over the weekend and earlier this week. But I feel like the market is at a point now where the rug can be pulled out beneath our feet. And that's why I have this banana peel up on this particular screen. So I think most of that is starting to really work its way through the market. I've said for months and months and months, and you can quote me on everything I've said and look back on all the videos. This European stuff is just like what happened in 2007, 2008 with subprime. Right? Subprime was a small part of the economy, really not going to affect anyone. And it turned into this huge plague that really grew throughout the economy and really touched everyone. And the same thing is happening with Europe. And they keep telling us that Europe is just a small part. US banks don't have that much exposure. But here we go again today with Fitch coming out and saying that actually US banks have massive exposure that we didn't even realize, or that the market didn't even realize. So we had this huge sell-off at the end of the day. Again, if you're a day trader, God bless you, because even today, the S&P futures, I was just watching them throughout the day, and it was just, up 20, down 20, up 15, down 5, just all over the place. So good luck trying to day trade this market. I think options are the way to go. I think the market's still going to be heading lower. And so we'll go over some technicals here so we can talk about that. So enough with the banana peel. Let's get into some of the charts as always. This is a chart of the NASDAQ, and I wanted to use this as the basis tonight for just going over some of the market stuff. I think what everyone is looking at right now is this kind of flag pattern that we've been developing over the last couple of days. And it's fairly consistent throughout most of the charts. And actually, I'm going to try a new cool trick here with you guys, so bear with me if I can't get it right, but I have this new highlighter that I downloaded, so let me try this. But this is what everyone has been looking at, is this flag pattern on the markets. And so what we've had is we've had a huge run up in stocks, and now they've taken a breather and moved sideways. So now the key is going to be, does the market break out lower? In which case it's got to break this support level right here. And that's really been the X marks the spot across most of the indexes. There's a major support level right below where we're at. So if we break that, it's going to be very easy to head back to this major level before the end of the year, I think. I think that'll be breached, and then we start running down there. So that's why I'm a little hesitant to get into the market with a lot of new trades. I think there's good opportunities, obviously, but I think that you have to just wait and let these patterns and these charts kind of work their way through before we start getting into things. So now as we take a look at some of the other things I wanted to talk about tonight is namely some divergence, MACD divergence, as we were talking about on the post. And if you actually take a look at some of the things, let me bring up my MACD indicator here. I've actually highlighted these a couple times for members, obviously, earlier in the week, but I've highlighted that a couple times before in the past. You can clearly see MACD is a great indicator for momentum, and you can clearly see how momentum had already started to top out well before the markets have topped. And you can see they actually topped right in the beginning of November, right up here. This is where the markets topped out at. But as it was going up, it was losing momentum that entire way. So this is classic divergence. As the market moves higher, MACD continues to move lower, and you can see that these histogram bars were moving considerably lower, and they've still continued to move lower. They just continue to move lower. So the whole time that we're trading in a basically sideways fashion here, we're still showing some very strong bearish divergence. Now the actual signal on the ones that I use with the MACD and the signals is actually this crossover on this black line. So this black line crossing below the red dotted line. And that really gives us our sell signal. And you can see that, again, we got that virtually right at the top, almost as close as you can be. Some of the other buy signals we actually had a buy signal down here back in October. And we had an even market, really. You can see that we had a market on MACD that was even, right? We weren't making any new lows. We weren't continuing to move lower. And yet the market had made a lower low. And so again, we have this bullish divergence, a very easy cross on the MACD to trade, and you can clearly see that the market rallied after that. But right now where we're at, and this is why it's so important to take a look at some of these momentum indicators, is that we still haven't really topped out, right? I mean, the black line is continuing to move down. It's not crossing above. It's not crossing above this red dotted line. And the momentum indicators are still showing that it's losing momentum across the board. If we look at some things like gold, GLD is a perfect example of a new momentum change that's starting to just happen. I mean, really, this is literally just happening right now. And you take a look at this, and you can see, again, same thing that happened on the S&P, is that we have declining momentum, and it just started to turn very bearish today. And we actually just got a bearish signal on gold today. So again, whether this actually plays out, it can easily come back in reverse, but you have to play the technicals. The market is moving higher, right? And yet we have declining momentum, showing that the market could be in for a little bit of a sell-off here. So we're definitely at a good area of resistance on gold. This whole area at 175 has proven to be very, very strong, but the support before, and now it's acting as resistance. So you have to trade off of these technicals and at least make some really good decisions. This is going to help with your trading and your probability of making money, right? You're not going to trade against this. You're going to try to trade in this type of direction, or at least away from it. If we look at silver is doing the same thing as well. You can see that silver kind of retraced this whole gap that it had back in mid-September. You can see this gap around 36. Retrace most of that, and again, we've started to see declining momentum. The black line has crossed underneath the dotted red, which is again a bearish signal, but this bearish divergence has already started to play into silver as well. Silver has been trading sideways, and yet divergence has been going wildly against it for the better half of a month here. So these are all really, really interesting charts to look at. I'll give you guys a couple examples of some charts just to help on some stocks right now that I think are showing some bullish divergence, actually. Now, of course, we got to keep the broader market in mind, but take a look at RIM, for example. RIM was making lower lows and is seeing bullish divergence, right? Increasing momentum in this stock. Now, it didn't actually bottom out until here, until a couple days ago. And we actually got the bullish cross on the MACD just 2 days ago. And so it's really important that you see that actually MACD is really good at kind of showing you where a bottom might happen, right? I mean, obviously, we got to wait for that signal, as we always do. Wait for the signals on the technicals, but it shows the underlying momentum of the market. And this is really where the power of technical analysis comes in, is in this type of application. If we look at things like Google, for example, Google had a really good example of massive bullish divergence right before the stock really kind of took off lately. And this was back in August. So again, I'll use this as my proxy here back in August, but let me just get a good zoom. There we go. So right back in August, you can see that Google put in a low at about 550, which is right about here. Then it put in an even lower low, right? Market falling off a map, right? Everyone would think that Google's headed down to low 400s. Put in an even lower low at around 490. But if you actually look at MACD, you can see that the momentum was virtually even. And even some would argue that it's actually a little bit higher on August 22nd when it put in that second low. And so the momentum had stopped declining, and now there was actually some momentum coming back into the stock. And you can see that it actually took a while for the actual signal to occur, but the black line did cross above that dotted red line right around, I'll call it the early part or late part of August here, and gave a pretty good buy signal that really carried us through most of September and October. So it's really important that you guys take a look at MACD. Hopefully this has been a really good mini lesson. As I said before, please add your comments to the post below so that I know what you guys saw or what you guys think of this. If you guys use MACD, I'd love to know how you use it, how you set it up, if you use the histogram or not, or if this is something completely new to you. So as always, we are looking forward to a good expiration here for the membership, and we'll talk to you guys later. Happy trading.